Good afternoon and welcome to the end of day review for today. And today is June 12th, 2024, and it's Wednesday of midweek. And today we have two, high impact news on one day. That's amazing. It's the first time ever we trade that the FOMC and the CPI on the same day. Normally they are separate, but for this time if they are on the same. So it's huge, and we're gonna see when we look at the charts right there. And the CPI come out like less than expected, so it really rallied right there. And the Fed, believe the interest rate unchanged, and they're gonna cut one this year. That's what the news come out. By the way, we are in week 24, which is 2 more weeks. We will finish the second quarter. Of this year. Well, then we have earnings coming, I guess. Second is some of the big, company, Tesla right there. Target. I think the next earning gonna be huge. Anyway, and for option expiration, the next 2 weeks gonna be huge because the end of the month, also the end of quarter. So expect a lot of volatilities. All right, the CPI, is today, and next time gonna be July 11. FOMC meeting today, right, June 12. The next time gonna be the end of July. Oh, so they have. Sometimes they have end of the month, mid month, end of the month, mid month. We see. And then after that, we look for, the end of June, end of month, we look for the GDP data release. And then we look for the PCA data, with similar to the PCI data. Basically 27, 28. Last time we trade is May 30, 31st right there. It make a huge move. So normally the huge move is made in the mid of the week, but the last week of the month, where we can see that the huge move made in at the end of the weeks, Thursday and Friday right there. So let's see how it's gonna play out this month. All right, let's look at the charts for today. Okay, let's look at the first trade we take. Look right here at the recording right here. So right here we have two levels. We see right there at 90, 50, 90, and then 87 right there. So we think that, okay, it tests above 1, 2, 3, 4. So if this one tests again, if we break the level, that's which one we put as a buy stop in there. That's our first trade. The sell stop right there. And that is our first trade right there. We go in at 89, for that matter, 75. So we put 1 cent below the entry right there, just to make sure that it will not reverse on us. So you see that it's crazy. You see that how in the volatilities, the order, the stop loss is not respect, not honor at all. You see that our stop loss is 150, and you will see that what we're talking about right here. So that is 8:27, right? 8:27, 3 minutes before 8:30, and you see crazy thing happen. And we learned a huge lesson. So next time we better prepare. If we want to trade in the first move, if very volatile, then prepare to get, to get a loss more than a stop loss. You see that? Yeah. How come we get stop loss more than the predetermined? We already predetermined like we're gonna get out of 92, but somehow the 92 not get executed, and we end up lost almost double. Crazy thing. You're gonna see right here. See that? You're gonna see it. It happened very quick. You see that? It was so quick that we don't even, right there at the 29. Yes, you see that? The 29.57, only 3 seconds. 54 still there. You see 57. Yeah, 54 right there. You see? Yeah. How is our stop loss is double? $150, but it's double our stop loss. How that possible? Well, one of the reason is maybe because the stop loss is a limit order, right? Stop loss limit order. That means it depend on the we want to we short them, so want to buy them, so we put in the limit big, right? So it depends on the offer at that moment in the market. So maybe at that moment there's no offer available for us because the markets move so fast. So it just keep our stop loss and keep bring the price up. That's the reason right there. You see that? So basically 95. Our stop loss is 150 at 92. But the market's only because the volatility it moves so fast that this order not get filled at that level, but it get filled at 95. So that's the reason we get the double stop loss right there. So we learn lesson that we have to calculate that the stop loss, our stop loss may not be honored at all in a volatility move right like that. So that's a lesson we learned. That if we want to trade in the very first move, because the only the first move in the after the new release is only the very volatile, very volatile move. So if we decide to trade, then keep in mind that our order will not be honored. It depends on volatility, and it happened exactly today right there. Our stop loss on at 92, 93.92, and only $150, but actually we end up double that loss right there. You see that? 65, double 5 point right there. We only won out 3 point, we end up 6 point right there because it's only, you see that? Yeah, we're gonna pick out right there. You see, yeah, you see that is you see move up right there. Yes, so 95 right there. We got fill at 95. We put a stop loss at 92. It gives us 93, but at 95, so we have to pay extra more, 2 point, more than 2 point, which is another 100 or so. Basically we lost about 150, but actually we lost almost 300, so double that right there. So that is the lesson we learned. If we want to trade in the first move, then we have to take this into consideration right there. All right, that's our first trade right there. It's just crazy move. You see that there? And then boom, the second. And you see that it hit exactly the level 53.8750. Take a look the level. Here's another recording. You see that? It take a look exactly touch that level. So now we learn the lesson. Right there, touch the level. So at the beginning, we saw at this level, but now we see that wow, if it failed to break a flip level, then it tapped the level before it going up. So another strategy for it is to put in a buy limit right here. Yes, the next time we will try to buy the limit right here if we anticipate it's gonna go up. Yep, right there. The reason why we go with the source because we look at the 4-hour time frame. We see the setup is right here. It's a 4-hour time frame. We see wow, it do like this, so it may reverse or may make a retracement. But we make mistake. It's not necessary because we see that wow, it retests from below and then break it level, break that level. So it's if it break that level right there, retest from below right there, one, and then break it. If for breakout, we're gonna reverse. If not, then it's a second. So that's two scenarios right there. You're gonna break out the level to the upside, to the outside. So we do to sort them. But next time we have to go in and go long as soon as we see that, because it only do two things, either expansion, make another leg up, or it's gonna reversal. And if we are bet on the reversal, in this case we short, then we have to get ready and go in and go long. That's the lesson we need to learn. Don't shy about that, especially it's have the new data release right there. So that is the logic right there and the lesson we learn. Let's look at the tape right here. You see the huge move right there. Giant move. Yeah. See that? Giant move. That go and start at 9:30. We're thinking about a short, but let's see what the second trade we take right there. Here's our second trade idea. So basically, it's a 4 breakout. It tests below, break it, and it come back and it reverse. So that's an trade idea we took right there. So let's see how we execute the trade. Yeah, here's our second trade right there. So we put a sell stop at that level. At the level 54.32 right there. Yeah, 32. But actually we go in a little bit lower than that. We go in with 31.75 something. And let's see. Yep. So we don't feel right because when the fall breakout happened, it really happened fast. It flushed. So we start, thinking about, get out of that trade, because it doesn't happen the way uh, um, we anticipate, especially right here. You have to be follow up flush very fast. See that? You have to flush very fast. Yeah, we thought they're gonna flush very fast right there, but somehow, wow, we have a good profit right there. We should take the profit when it's we try to move our targets. And we're thinking about close position. You see that? To break even right there. Thinking about closes. But we did not closes. You see, we're thinking about, because this have to be flushed very fast. So as soon as it retrace a little bit, we are get out. You see that? We get out. We take get out. We take profits about 100 something. Yeah, about 100. You see, we're so glad that we make that decision, because when you in the trade and it not happen as you anticipate, especially breakout, it has to be happen fast. Otherwise it can flip on us on you right there, right here. See that? They have to be happen fast at the candle. Otherwise, the next candle I don't have to be fast. Otherwise, it doesn't make any sense to stay in the trade. You see the next candle right here, and the candle after that, it just the candle has to flush. You see exactly it flip on it right there, and we're so glad that we get out and take a half an hour profit right there. That's our second trade. Now take a look at the third trade we take right here. Yeah, here's our trade number 3. Trade number 3 is built on the trade number 2. Right, number 2 we saw that it's supposed to follow up, but it flipped, so we know that the candle flips, so it's gonna be a second leg up right there. So the retracement finish, it's gonna be second leg up. That's the reason why we go long right away at the level right here at the level right there, level 54.32 right there. So this boat should be break down the level, right? But it flips, it break the level, then we go in that level. It's gonna be a second leg up. So that's the logic right there. We go in 50, yeah, we go in 50.31, right? Yeah, we go in a good price below that, because we know when we see the flip, we go in early right there, and we keep adding into our size right there. We add more contract to that. You can see that move along. As soon as we know that it's gonna flip, so we add more. You see, we add one more contract in there, and then we see moving good. We add one more contract, number 3, and then we add one more contract, number 4. I think we stop right there, and we target very conservative right there. So you see that. Boom. So we get a nice profit right there, about 900 something. But if we let it run, it's gonna be huge. You see right here. Yeah, so we go in at 930 right. It make the way. So we go in right here. It will let it run, and we close at 10:15. So let's run about 45 minutes. We have a good run right there, almost 3 hours, almost 4 hours right there. Wonderful. So it's very hard. Sometimes you want to take a quick profits, but other time you may have to let it run. Let your winner run right there. So it's very tricky. But maybe the signal first is when it flips, then let it run because it can make another another leg up. The thing that in our mind said, wow, it already make a huge move, so we will be not much momentum, but that's what we think in our head because we have no control how the algo runs. So that is our limit belief right there. Yeah, but if we let it run, we have basically we left a lot of profit on the table for that trade. Alright, that's our trade number 3. Now let's see what trade number 4, how we trade number 4. Okay, the trade number 4 we check is right here at this level at 54.43. Let's see right here, this level 54.43.50 right there. So basically we see that right here it tests from above twice, it break it, and then it reverse. So our logic is that, oh well, you already break the level and you reverse this. The only way you go back to that level is to break it and create a retracement, a second leg down. So that's why that's the reason why we took the trade number 4. We go in, we put a sell stop right here, and we did get into the trade. Let's see how we execute trade right there. So we put a sell stop at that level 43.25 right there. And well, the reason it come back to that level in order to break it. Yes, so we're into the trade at 54.43. 54.43 right there. So we going a little bit too early right there. We put 2 pips above that. So we go in at 43. 2 pips, half a point above that. So 43 right there. So we feel it doesn't feel right because this setup is supposed to happen very fast. You reverse, it is a bearish order block, then it could flush down. We don't feel right, so the reason why we we see that there's no momentum, not much. You have to move fast, then we just get out of the trade. You see that we close position. You're going to see that when we wait until it's break even, we close. So it's a break even trade for right there. We just pay for the commission fee and we get out of the trade. That's what. So everything looked good until this moment. So we execute very well right there, but until trade number 4. And now let's see what we do with trade number 5. So here's our trade number 5. Number 5 come from the idea right here at the 54.39 level. We see that it tests above 1, right? So now it come back, it's gonna break that. That's in which we have put a sell stop right there, around 12.15 right there on that candle. You see that we put a sell stop right there, and we get into the trade. Gives us. It's supposed to be, when it break out, it's gonna supposed to be flush very quick, very fast. But we didn't see that happen, so we get out of the trade with a break even. The same, perfect. Everything up until trade number 5 is perfect. We execute right, right entry. Now go to trade number 6. See what next for us. Alright, here's trade number 6 we take is come from the idea right here. Basically look at the level 39. Right, we see that is test from above 1 to break it. So it's come back this level, it's gonna reverse. That is our Our trade idea, that's what we thought at that moment, how we formulate a trade. So we put a buy stop right there at 1345 candle right there. And let's see how it's play out. Right, you see that we put a, let rewind a little bit. Okay, sorry, that right there. So basically we say that 39 level right there, we put a buy stop. You see that buy stop, yeah, we moved to there 39 but 40, so we want to put a little bit safe, one pip above that, and we actually perfect. We thought that we have a perfect trade right there. It touched level, then it's gonna reverse. But here's the trick, and we in the trade for 5 minutes or so. We thought that it's gonna move into our way, but here's the interesting happened, and we are at the last minutes before 2 p.m., which is where the new release, and that's where the tragic happened, because the volatility is the same like the trade we take this morning on the CBI data. It's so volatile, and we paid more than our stop loss, and this exactly happened the same for today. I mean for the FOMC meeting. So we learned the lesson twice today, and I think we're gonna remember for the rest of our life right there. So if we want to trade in the first move of the first big move after the data release, we have to pay. We have to willing to pay more than what we are supposed to, because the market will not honor our order, because it's so much volatility. Yes, so much volatility, and you see that we learned the lesson in the real time. So you see, we put our stop loss right there, just $150 for stop loss, and we are just 4 minutes before the big new release FOMC, and you're gonna see. We thought that we got, it move our way. It's gonna be, explosive, make the second leg up, and we kind of happy, but then the tragic happened. Okay, and now we have a second idea. We have, well, if it failed to break up here, surely it's gonna be break down, right? Because right here it's gonna make the move right here. One way or another, it's gonna make the move. We're so convinced, and that's the reason why we put a sell order right there. So we see that if it break the level, it's gonna sell off very big. That is brilliant idea, right? But that's where that's where the tragic happened. Just 1 minute or 2 seconds, before the new release. Here is what happened right there. So basically, when the new release, the volatility is so big, right? This is our long trade, right? We hit stop loss, and then it execute a new trade, and somehow it hits the stop loss for second trade also. Well, if that's the case, then we pay 2 stop loss, 150 and another 150, because we predetermined our stop loss, so we 200 right there. But somehow it take the whole profits. We make 700 right there. So somehow we lost double. Yeah, if we lost 300, somehow we lost double that. 600, 700 right there. It's crazy. You see, boom. See that? Now we lost all the profits we gained, about $700 just for that. So that's the huge lesson for us to learn. That that try not to engage in the first move, but if we do, we have to be careful, because we have to be extremely careful, for lack of a better word, because the stop loss can be double the loss, because they will not honor our stop loss, because the volatility is so big, so fast. They will not honor our stop loss. somehow they double our stop loss. This is crazy right there. And you see that in the real time. That's a huge lesson for us. Trade number 6 right there. So from the profit 700, we end up losing. Just 2 trade right there. We lose all. That's the lesson we learn. Right there. All right, now go to the trade number 7. We check trade number 7. Wonderful. Trade number 7. See what next for trade number 7 for us. All right, here's the trade number 7 idea. Well, we see that it break the level of 40. You see that? Break it, test from below. Then we know, wow, for certain it's gonna be, reverse go to that level. If it's gonna break the level, reverse. That's our trade idea for, and as the time of the release right there, 14, which is 2 p.m. right there. Let's see. So we saw that, wow, it's supposed to go down and now it go up. So we thought that it's gonna be, we thought that it's gonna rally. So we have FOMO right there. It's totally FOMO right here, especially in the data release time. Then it's very volatile. And let's see how we do the FOMO right here. You see that? So basically, we lost right away. The reason we lost right away because we increased the size. We want to buy buy 5 of them because we thought they're gonna flip. But the mistake we make that when we determine our profits and target, we only do at one contract, which is 150 for 200. That's which why as soon we put in 5 contract, our stop loss hit right away. That's the reason why we lost right away. So that's a huge lesson for us right there. I'm so glad that we make that mistake in the practice account, so we can learn lessons. So we try to avoid not make it in the real account right there. So we have our real account in the next 2 days. So we already blow them up, so we have to wait for the real account every month, right? So we blow them up and then wait. So last two weeks we just do practice. And that's the reason why we have to make as much mistake as possible so we can learn. And here's the huge lesson we learned for today right there. Try not to jump in on the first move. But if we do, don't do the too much side right there. And have to make sure that the profit and target match with the side we have. Otherwise, we pay big price right there. And that's the lesson we learned right there. So as soon as we click buy, we get stop out right away because the the stop loss is for one contract, so it's only 250. So we stop loss 2 times, and especially when it's in a volatile, we get kicked out. We get stop out right away. But that's the risk we take. If we're right, then we have a huge move. But you know what? Because the market already moved too much, and right here it's just a retracement. It will not make any big move. So we have to choose the time and the location to reach. So that's the lesson learned for right there. So that's the trade number 7. We make the lesson we learned, the mistake we make, and lesson we learned. Let's look at trade number 8. All right, trade number 8, the idea that, after the new release, so we know, all right, so it tests that level, it break the level, so we put a buy stop right here. It will not, if it reverse, then it's gonna get into that level. We put a buy stop right there. So that's what we put. But for sure, we put a little bit, 1 or 2 pips above that level. So we put a buy stop right there. Yes, so we get in. We get all our order fill. And you know what? We get mistake right here. the mistake right here is, you see that as soon it moved into our direction, we are only one contract, but as soon it moved out to direction, we add 5 more contract. You see that? We click 5 more contract. You see, we already put 5 more contract. You see that there? Exactly right there. And at that moment, we see this setup so attractive. You see that? The sell side liquidity was just rated into all the way here. And then you see that it break the level, right? It reverse, break. Then there's gonna be a huge move up. That's what we anticipate right there at that level. So right here, which is that is break. Actually right here at this level, we're going at 38, yeah, around here, 37, 38 right there. So basically we say, wow, it's break, reverse, break. I think we're going there at that level. You see that? That level right here, around here. So we say break, reverse, break, then there's gonna be a reverse right there. So we go in right there, we're sure that we're gonna get another leg up. That is our anticipate right there, or at that level for that matter, 35, 35. I think we're going at 30, 38. So we see at that level right there, that level. Yeah, we yield that level. We put a little bit up, 37, but put a little bit up right there. This low is, yeah, 38. That's about right. We go in right there. You see that? We see it's break, reverse, and then break. Then this is gonna be a reverse. It did for a moment, and that's the reason why we thought that we're gonna have a huge move. So we add 5 more contract, and let's see. But as soon as we add our contract, it kind of reverse, it kind of move again, and then wow, at one point it moves to that. If we take the profit, then we're good for the day right there. You see, at one point it moved very huge right there. We thought that, wow, we see that movie before. We see break and then reverse, right? Break, reverse, and then break, and then it's gonna reverse. That should be in the movie we want to see. And you see that at one point it go up to 800. We should take profit right there. But we did not, and we pay price. And you see we move our stop loss a little bit closer. And then you see what happened. Yep. You still have 300 right there. Well, 800. 1,000. We should take profit right there, but we so convinced that it's gonna hit our targets, so we just leave it there. And here's what happened. Right here. Right here, we already got thinking about close our position right there. Let's see this. We close. Yes, so we close our position with a small wing right there. We close our position right there. So that is our trade number 8. Normally today we do about 9, 10 trade. It's too much. I think it's over trade. Around 5 trade is the best for us, but somehow today we out control. So we have to watch ourselves, mindful of ourselves. But I'm glad that we do in practice account, so we can learn. We can observe ourselves right there. Now take a look at trade number 9. Alright, here's our trade number 9 idea. So we look at the level 35 points. You see that? So it's break, reverse. Then we thought, wow, this is gonna be a bearish order block right there, so we can make a second leg down. So we put a sell stop in here at this level. Because this guy spoke to what? To continue the second leg up, but for some reason it flipped, so we put a sell stop right there, and it makes sense. Perfect. Right there. So we put in a sell stop. Yeah, we put a sell stop right there. Boom. It get us into, yeah, order get filled. We have perfect. So we're gonna break down. But we learned the lesson right here, because the stop loss too big. Because you have to give the stop loss. In this case, our stop loss almost an hour right there, and we anticipate here. But normally we want to put our stop loss only, $150 only for one side right there. So perfect. It got executed trade into the trade, and at one point it go into our at one point you see right there, it go into our direction right there. We thought it's gonna be breakdown pretty hard, because the reversal, right? Break reversal, then boom, it's gonna come down. That's what we anticipate. But you see that it did not happen. It flipped on a very quick, and you see that as soon as it break that level, we add 5 more contract. That is our confidence right there. But the markets have something in the slip that we not recognize at that moment, but later on we recognize the pattern right there. But at that moment we thought that, wow, we have money in the back right there. That's why we increase the size. And now we get panic. We said, wow, what happened? Now we look at here, we said, wow, we lost 2,000 right there. We got panic right there. So when we get panic, what we do? We react. we react in the panic mode. So we thinking, wow, if we cannot break down level, then it's gonna break down up level, so we're gonna put a buy stop. And that's where the brilliant idea come in. You see that? We put 15 contract. We see that? We said, wow, I want to regain the loss. And that's the whole thing right there. The revenge trade, and it's still so clear and so raw. We have to expose ourselves so we can learn right there, so we can learn to manage next time. So we put 15 contract in the buy order right there. You see how revenge happen in real time right there. It's at subconcept level. We thought we managed better, but it not. Today it come out very strong. You see that? Come on. And you see, boom. You see that? Basically, it hit our right here. So let's see right here. It still not hit our stop loss. Oh, so as soon as it hit this order, it closed this order. We get take a loss. Wow. We haven't closed this order, but as soon as this order get actually, oh, that's the new lesson we learned right there. It cannot maintain 2 orders for us. So as soon as it get filled in, this order will get closed. The trade will get closed, and we take a loss. That's what happened. Yes, you see that? As soon that the second order get filled, then it closed the trade. We lost right there, 3,000 right away, right there. Oh, that's amazing. Oh, but you know what? Oh, you know what? We put the buy, right? So it buy 6 contract and then 5. Oh, I see. Oh, now we see now. Be careful with 2 order. It will subtract whatever you have That's why you take the loss right away. Oh, that's beautiful lesson for us right there. Man, I'm glad that we did this and we learned this, so we're gonna avoid the lesson in the future. Oh, so wonderful! Wow, we now can see. Yeah, we take out of the way and you see what happened. All right, so we go into long trade and you know that. Beautiful. Look at the UC 8,000, but you know what? We have to look at the risk, not a reward, you see. And let's see if our brilliant idea working. So brilliant. 15 contract. You see right there, the top step they close because we hit the maximum loss limit, which is 4,500. We close. Basically, we blow up our account today just for this trade, just for one trade on the 413.40, 413.30 right here. We blow up our account on this on this candle. Yeah, I think we did take we did take a screenshot when we blow up our practical right here. We blow up our account at this candle right there. It's back and forth right there. So the lesson learned for us: try to avoid FOMC on 12:30. I mean, not 12:30, but 14:30. That's where the Fed started meeting. It's very volatile. And at 14 also, at the 14 right here, which is 2 p.m. It's very volatile. Avoid that. Let the markets, settle out and you have direction, which is perfect right here. If we let this guy settle out a little bit, we have perfect setup right here. This called what? Fall break now, right? Double break, break, reverse, break, reverse. So we can put a buy stop right here. We have a nice run right there. So right here, if we go in right here, we have a nice run, target this high or buy stop really. We have 3R right there. So next time we have to learn our lesson that let the market settle out a little bit until you see the clarity. If there's no clarity, don't take the trade. And don't find the price action. Let the price settle out. Be patient. Wait for the market accumulate. Yes, that's another word. Accommodate. Don't try to jump the gun too early right there. Let's see what we have right here. Yeah, so here's the trade idea at 14:45 right there. After you let this candle, which is at 2 p.m. 14 settle out, you see the setup right there. Let's look at the level 54.32, right? You see that? So it's break this level, it retests from above twice, 1, 2. And this guy is supposed to to reverse this level. But it fell, it flipped. Then we know that we're gonna go in. We can put a buy stop at this level. For that matter, right there. Put buy stop right there at 35. That's the first perspective. You look at this setup. Right, this is supposed to be reversed, but it fell, it flipped. Then we can know it's go long. Before that, don't touch it because it's very confusing. When you see that you confusion, then wait for clarity. That's the lesson we learned today. Very powerful, very beautiful lesson we learned. Here's another way you look at that setup. Here's another perspective we look at this setup. Basically, it's a second leg up at that level at 54.35. It's the second leg up, right? First leg up, retracement, second leg up. That's an idea. And the setup right here is called, we give it a name, double break, double reverse right there. Break first, then reverse, and break the second time, which is, that's an order block to go long right there, and then it reverse. And that's another way we look at this setup. There are two ways you can look at this setup. You can look at this way, also you can look at it this way. You look this way, it's going to be the level of 54.32. But if you look at the second way, it's going to be a level at 54.35, 2 point above right there. And we see that pattern before. Let's look at some of the symbol we had before. Here's another instance that it happened before. It not exactly, but the logic, the core logic is there. This one happened in April 25th. So basically we have, you see that, break, reverse, break, and then reverse. So this is another word people call this is called double bottom, which is exactly today is the double bottom. But the bubble bottom right here, it cut back and forth, hard to see. But right here, you have space between them, so it's easy to see them. And another note we have is that you see right here, the so-called retest from above twice before it breaks. So it's a very high probability setup. In this case, this setup is much better than this setup. You know why? Because this setup, before it break, it have the retest from above. Is that it retest from above and break it? Retest from above and break it. But this guy don't have retest. That's which way very low probability setup. We should avoid this. And also the location, because this guy is on the right and this guy is on the bottom. So this guy have more room to run up than this guy. So next time, try to avoid this as possible, because it's not much room to run up, and it's very risky right there. So if we try to trade, then trade very small side. If we try to trade this, we can put all the money in this one, but don't put all the money, just for fun to do one side, one contract only. But the logic is the same. You mark the level, it break the level, and it reverse. Break the level the second time, then it reverse. The same idea. But this one have a better setup because have retest from above before the break. So the second break, the second break is where you put your order in. The long order right there is the same right here. So we're on the Hill lesson today. I mean, very, very good lesson. The first lesson we learned is that it's very volatile on a release, high impact news release. So our stop loss will not be honor or get filled exactly. We may have to incur more loss than we anticipate. That's the lesson we learned right there. Huge lesson, and also the lesson about overtrade and revenge trade is still there. We still practice. We still have that issue. We should still working on that for sure. Another lesson is that try to not overtrade or revenge trade for that matter. It's okay to take a loss and stop for the day. I mean, if we are not overtrade, we stop at trade number 4, number 5, we're good. We get profit for the day. But for some reason, we will love to engage. But anyway, we run the Hill lesson from the engagement today, and it's in practice account. So that's the beautiful thing of that. So next time in the pre-workout, we will apply this lesson. We will not do that again. So anyway, thank you for your time and interest. We're always grateful for the opportunity. We do what we love, and success coming to our way. For sure. Have a great evening and talk to you tomorrow. Bye for now.